Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra and you're watching CNBC TV18. Well, it's turning out to be a day where there is largely pressure in the broader markets. You'd have to say the frontline indices are consolidating. We have the mid-cap index, which is under pressure, down around 0.5%. But a lot of pockets of strength. So, for example, realty stocks are doing very well today. We have Brigade Enterprises, which is up 6%, Prestige Estates, which is up around 4.6%. A couple of the pharmaceutical stocks are doing well as well. So, case in point would be Piramal Pharma, which is up around 3.5%, and even something like an Alchem, which is up around 3.5%. A couple of these hospitals as well, Narayana Health, Max Healthcare, Fortis, all of these stocks higher by around 1.5% to 3%. So there are definitely a lot of pockets of strength emerging in today's trading session. A couple of these banks, such as PNB Bank, PNB are under significant pressure, so down around 6.5% for that particular counter. A couple of others, such as Z Entertainment, IREDA, on the back of news, all of these stocks are down and out. But joining us today, we have Astha Jain, research analyst at Hem Securities, Kush Bohra, who's the founder at kushbohra.com, to answer all of your questions. Well, Astha as well as Kush, welcome to the show. Kush, I'll start by asking you. It's a pressure day for the mid caps. How are you approaching trade today?
Hi, Ekta. Hi, Astha. Very good afternoon to you and all the viewers. Well, the way we've actually, in one of our reports in our advisory service recently, said is that this market is 2 steps forward and 1 step back. That's exactly how it's panning out. We've had a day on Friday where the markets ran up quite a bit and then, gave way. Today we are seeing some sort of a pressure, but I think, this pressure is likely to continue for the week. My primary reason for saying that is if you see the the call option basis, they've shifted for Nifty from 22,700 to 22,500, and for the Bank Nifty, they've shifted from 49,500 to 49,000, which is suggesting that the market or the participants feel that the near-term resistance are in place. So I will be a little wary, but if I do get markets close to, let's say, the Friday lows, I will be tempted to go out and buy with a tight stop loss.
Okay, all right. So you'll probably want to buy if in case we do hit those Friday lows. Well, we do have a lot of queries lined up today, so let's get to those. We have SS Kannan, who writes to us from Chennai, holds 390 shares of CG Power, which is bought at around 286 odd rupees. He's a long-term investor. He's sitting on a good profit, wants to know what to do for the next 6 months. Well, Astha, let's start with you. What would you recommend on CG Power, long-term 6-month view?
Hi, good afternoon to both of you. Talking about this counter, first of all, we have results expected today. So we really need to keep a close eye on the results, which will be coming today. But I think if everything goes well, definitely it's a hold from our side. First of all, want to give the price target, which is around 585 to 620. Now talking about this counter, it is one of the leading manufacturers and works into the industrial motor space as well as rail product, and they work into the transmission space also. So they have their own specialization in different categories. Somewhere they have the leadership also, and what we believe with the improvement in their capex plan also, the company will definitely perform strong on the financial performance front. So looking after all these things, at present we are positive on this counter, but we really need to see the results. So recommend hold on this counter with the price target of 585 to 620, provided if the results will come on expected lines.
Okay, all right. What about you, Kush? How would you approach this stock? It's given good returns of around 40% in the past 6 months. Do you think it's good for more in the next 6 months? What would you probably look at technically in terms of parameters?
Well, we are seeing some sort of a pressure on the stock. Last week it did make a bearish candle. Today we are seeing a follow through of that. Although it's a little early in the week, but we're still seeing that follow through. So my suggestion is, while the overall setup does look bullish, it's not a bad idea to take some money home. So perhaps they can consider booking out, let's say about 25 to 50% depending on their position size, and hold the rest for targets of 625. So book partially here and hold the rest for levels of 625 for the next 6 months.
Okay, all right. Well, we have KVG Rao now, who writes to us from Andhra Pradesh, holds 1,000 shares of Escorts Kubota, which is bought at around 224 rupees. He wants to know, 224 is a great price. He wants to know what to do, whether he can hold those shares for 1 year. Well, the question is whether he should hold it for longer or not. What would you recommend on this one, Astha?
So talking about this counter, yes, we are positive on this counter and recommending hold on this counter. Although our price target is around 3,900, so we think that this counter is well poised to show strong future performance. They are one of the leading manufacturers in the tractor space, and going forward, we are expecting strong demand to this company in this space. So we are positive on this counter and recommending a hold. Price target can be set at around 3,900.
Okay, and what would you recommend on the technicals, Kush?
Sure. I think we've had enough and more such queries where the investors have bought it at practically dirt cheap prices and held on. I think you've got an entire show there lined up. If you just put all of these queries together, that's on a lighter note. But on a serious note, continue to hold. The stock has not seen any kind of a whiff of market correction or market pause that is come around. The stock gaining from strength to strength. I agree with Astha. 3,900 is a fairly reasonable target, and if they continue to hold, the stock can see higher levels as well.
Okay, all right. Well, the stock has returned very well. It's up around close to 70% in the past 1 year. Well, we now have KVG Rao, who writes to us from Andhra Pradesh, holds 1,000. I think we've already gone through this one. That's on Escorts Kubota. We have Vishal Saxena, who writes to us from Surat. He holds 15 shares of ONGC, which again, he's bought at around 70 odd rupees. So again, sitting on a good profit there. He wants to know what to do, whether to continue or to hold or to sell at these levels. Well, Kush, what would you recommend on ONGC in terms of the technicals? Is it a hold, or do you think profit taking would be prudent?
I'll go with the latter. Book partially. Although the stock has seen a sharp run up, we know historically the space has not really been a money spinner. They're sitting on very neat profits here. At the moment, the stock is seeing some sort of a pressure consolidation with a mild positive bias. So not a bad idea. My suggestion would be book partially, hold the rest for targets of 310 and above.
Okay, all right. And what is your view on ONGC? Astha, what would you recommend on it?
First of all, it's a minor correction from my side. CG Power has just only declared their results, I think few minutes back. So maybe I have not got the chance to look after it. So I think initially the results were not that good because we were talking about that counter. So the company has declared the results and we have to really see in the detail how the results are. Meanwhile, our stances hold. Now talking about ONGC. So first of all, want to give my recommendation here. Here we are recommending hold on this counter with a price target of 320 because we all know that the ONGC has the plans to commence a certain, their KG98 basin. So certain production will definitely get added to their counter. And that is what I think it will be giving, drive to their financial performance going ahead. So what we are thinking that with the commencement of this KG98 basin, definitely the oil production will get a lead and we will be seeing strong volume from this side. So we are positive on this counter, recommending a hold on this counter, although price target at the initial level can be kept at around 300 to 320.
Okay, all right. Well, ONGC done extremely well. As you can see on your screen, it's just been a one-way chart in the past 1 year, giving returns of around 75% in the past 12 months. Well, Ajit Thakur now writes to us from Pune. He holds 50 shares of Bandhan Bank, which he's bought at around 375 rupees per share. He wants to know what to do, whether he should book his losses or stay invested. Well, Kush, over to you on this one.
So, rather, we know this stock's not really performed well. Now, this is a second attempt from that 175, 180 zone, at a revival. The stock was in a deep oversold territory. From there, it's reviving. Now, this pressure could remain, but, on the second attempt with, fairly decent volumes, I think there could be, a rebound which could take the stock slightly higher. Although the buying price is way high, I think, a level of perhaps 210, 225 is on the cards. That is if the 175 level is held. So my suggestion here would be hold with a stop loss of 175, which is the current low. If this rally does indeed, take the stock higher, then you may exit close to 225, odd levels, and that way your losses could be a little minimized. I don't see the stock jumping all the way to his buying price, anytime soon.
Well, Bandhan Bank has been in focus on account of, Chandrasekhar Ghosh planning to exit. So that's going to be a big piece of news which they have to reckon with in the long term. And we have seen many such exits take place, Astha. But for Bandhan Bank in particular, is that changing your view at all on towards the stock? In the past, we've seen the likes of Shikha Sharma even exit Axis. So there have been high-level exits which have taken place, but what is your view in terms of Bandhan Bank and the impact?
So the point here is that markets don't like uncertainty. So, and that is the major point. That's why we are seeing some sort of correction. So there is the uncertainty regarding the management succession, and that's why we have seen the stock performing not strongly on the bourses. Secondly, there are some asset quality concerns also, especially in their emerging entrepreneurs business book. So this EEB book is definitely posing some sort of challenges to this bank, because we have seen asset quality concerns, while what we are seeing that at the same time the other banks are really, when they are showing some sort of improvement here, the problem with this bank is the asset quality concerns, which is continuously grappling the bank. So all in all, I think it's better to exit from this counter, because we have really some sort of uncertainty. Maybe in the long term we can see this stock improving, but right now we are not very much optimistic on the prospects of the counter, hence we are recommending exit on this counter.
Okay, all right. Well, Rajat Sharma now writes to us from New Delhi. He holds 5 shares of IndusInd Bank, which is bought at 350. He wants to know what to do, whether he should add more shares at these levels. Well, you know, that's the thing. It's a frontline stock. Look at the kind of returns that he's sitting on already. Do you think that it would be a good buy at these levels, Astha, for a, say, a longer term portfolio stock?
I think one should wait for some more time to get into the entry in this counter. Although the counter looks good to us, and we are recommending hold those who already have this stock in their portfolio with a price target of 1600 at current level. So talking about this counter, although I mean the bank which they have posted the results that were quite okay, but what we really need to see is that how their asset quality is going to perform in the longer term, and their provisions also we really need to see. So right now, not very much positive to make a new entry. But yes, if someone has this counter in their portfolio, can keep a hold with a price target of 1600.
Okay, and quickly on the technicals, Kush, IndusInd?
Don't recommend a fresh entry. Grappling with the 200-day moving average. If it doesn't hold, then could give way and test the 1400 level as well. So not for a fresh entry perspective, but you have an existing position. Hold with a trailing stop loss of 1450.
Okay, all right. Well, on that note, we need to take a short break, but a lot more queries lined up. Stay tuned. Welcome back. Well, you're still tuned into Your Stocks on CNBC TV18. We have with us Astha Jain on the fundamentals and Kush Bohra to answer all of your technical queries this afternoon. Well, let's get to another query now. We have Sivananda, who writes to us from Chennai, holds 110 shares of Lux Industries, which has been bought at around 3,515 odd rupees, and 30 shares of Trent, which is bought at around 1,350 odd rupees. So currently he says he's a long-term investor, wants to know the future prospects of both of these investments, Lux as well as Trent. Well, a lot has been spoken about Trent. Both of these are, textile plays. Astha, what would you recommend on both these counters? Lux, sitting on a loss at this point in time, and Trent?
First of all, Trent. So yes, hold from my side. 4900 can be the target which can be set for this counter. Maybe buying on dips is also advisable for this counter now. Why? Because we all know the results was superb, and they have shown strong performance, especially in the top line on the back of increased footfalls. In fact, the stores addition is also going very strongly. So all in all, it's a good candidate to make a new entry also, maybe on dips. So a buy on dips as well as hold can be given to this counter with a price target of 4900 at the initial level. Now talking about Lux, actually this has shown a strong downside, and the major reason behind this is that since the raw material prices of this company, which is yarn basically, so it has seen the sharp correction, and due to that, company was not able to maintain its margin, because ultimately they have to pass it on to the customer, and in fact they have also lowered down their prices. So that was the major reason we have seen this counter was not performing, because since June 2023, the raw material prices have fallen, and their ultimate price was also seen a lower down. But now I think with the stabilization of this raw material prices, especially yarn, I think the company will be able to maintain the margins. In fact, they are making entry into the kids wear, women's wear. So all these efforts by the company will definitely pay into the longer term. But in the shorter term, I think the price target cannot be set more than 1600 to 1700, although the cost price is much, much higher. So the investor really need to wait for a long term to see some sort of profit, but initially hold with a price target of 1600 at the current levels.
Okay, all right, that point's taken. And what about you on the technicals for both these counters? Lux on the downside, trend has just gone from strength to strength. Kush?
Well, on the first glance, it seemed like that the prices were a little mixed up. But I think on the Lux move, I think 1600 to 1700, the prices that Astha mentioned, does seem like a reasonable target, and there could be some sort of supply pressure coming in. Previous year highs are also around the same levels. In fact, already you've seen the stock, perhaps coming into a bit of profit booking after the sharp up move. So I think hold on to this one for 1600 levels, but beyond that, I think you should exit. It'll be a while before the stock moves higher, and you could utilize that capital for some other stock perhaps. Strength, as you said, has gone from strength to strength. It's a buy on dips kind of a stock. So any decline that you get, any 3 to 5% decline that you get on the stock should actually be utilized for adding some more. So Trent is a hold, Lux is an exit close to those 1600 levels.
Okay, all right. So Trent is a hold and Lux would be an exit. That's the call coming in technically. We have Rashmi, who writes to us from New Delhi, holds 20 shares of Tata Power, which is bought at around 50 odd rupees, and she wants to know what to do, whether to hold or sell at these current levels. Well, what would your view be on the long-term basis for Tata Power? Astha, over to you on this one.
So immediately we are seeing the targets of around 480 to 500, maybe not for the long term. In the long term, the targets can be much higher. But yes, immediately we can set these targets for this counter. So talking about Tata Power has some good news. I think recently they have signed some agreement with SGBN also. Along with that, in their previous commentaries, management have guided for 20% growth in their top line, bottom line, EBITDA. So we are really looking forward to those numbers, and that's why we are positive on this counter. But at present, we want to keep our target limited to 480 to 500 levels.
Okay. Okay. And what about you, Kush? What would your call be technically on the counter?
Oh, absolutely. Continue to hold. You could even accumulate on dips. As we were discussing in the beginning of the show, anything power has been doing fantastically well. This is one of the leaders, of the pack, has gone from strength to strength. I think any decline also that you get, close to those 425, 450 odd levels should be used to buy some more. But for an existing position, not an issue at all. Continue holding on to this one. I think, 480, 485 is perhaps a very reasonable target on this in the coming months.
Okay, all right. Well, we have Shruti, who writes to us from Pune now. She holds 20 shares of IOC, which she's bought at around 60 odd rupees. And she's asking if she can buy more shares of IOC at this point in time. Well, what would you recommend, Kush, on IOC? Technically, do you think that it would be a good call to purchase more shares?
Well, probably a little lower. I know the stock's already corrected from those 195 highs, and it's consolidating here. But perhaps close to that 155 mark would be a good entry point. I think there is still some pressure, some uncertainty, some hangover on the stock, but definitely a buy candidate. So I would suggest buying, but at a slightly lower price of 155. She's already got an existing position. So even if the stock shoots higher from here, shouldn't hurt. So around that 155, 160 mark, you could look at adding some more.
Okay, all right. Well, given very good returns in the past 12 months, is it good for more according to you, Astha?
Good to hold with the price target of 190 at the current level, because what we have seen in the results is that the Petchem division is not working so strongly in this counter. But the company is set for having few projects which will be getting commenced in few years down the line. So that will help the company showing strong financial performance. This is what we believe. And in fact, at present, which is their weaker segment, that is Petchem segment, I think it will also get turned around by the H2 of FY25. Although their refining segment is working great for the company due to robust oil demand. But petchem segment is a cause of concern right now. But if it will get really turnaround in H2 of FY25, which we are believing it to be, then definitely in the long term also it has strong prospects. But right now, a hold from our side, price target can be set at around 190 odd levels.
Okay, all right. Well, we have Shantanu Kumar, and it's an investment query. He writes in from Mumbai. He wants to know if this is the right time to enter the IT sector now, and if so, which stocks is one recommending? Well, interesting question, because it's been a sluggish quarter for a lot of the IT companies this time. What would you recommend, Astha, from that perspective, considering that there are concerns around demand, there are concerns that, there is going to be a threat from AI?
Yes, and that's why not very much positive on the IT counters right now. But yes, if someone really wants to invest in IT counters, then I think TCS is a better option because it is a big IT company. In fact, the results were not that much disappointing as we have seen in the other cases. So if anyone want to make an entry, then TCS is a better option rather than any other IT counter. And the price target which we are setting for this counter is 4100 to 4200, with a disclaimer that we might hold the stock in our PMS also.
Okay, technically, Kush?
Couple of names, TCS, as already mentioned, so I won't bring that up. Persistent, had seen a sharp fall for the last 3 sessions. It seems to be, halting, the fall now, making, an attempt at revival. I think Persistent is a stock that, you can consider from a long-term perspective, to add on your portfolio. From a stop loss perspective, 3150, and on the upside, we know the stock does have a potential to move to 4,000 and the recent highs of 4,400 as well. And a slightly different tech pick is KPIT Tech, not really affected by the vagaries of whatever else is happening in the industry. So Persistent and KPIT Tech are the 2 stocks that I have on my radar from this space.
Okay. All right, Kush, as well as Astha, we're going to let you go on that note. It's always a pleasure to hear your views and get all of these queries answered. Thanks very much for joining in and taking us through all of that. That's all the time that we have on the show. But do remember to email us your questions. We'll address them as always with our experts. Stay tuned, closing bell, to take you through the last hour of trade.